Hello, my name is Ivan, aka Armenia. I've been trading for more than 10 years now. Today we're going to talk about premium and discount and trading sessions. This is a second block of our free trading course. We will have 8 blocks so far. Before we start, please hit the like button, subscribe to the channel, set notifications on. Also, I would love to hear your feedback, so you can leave some comments below. So let's talk about premium and discount. So premium discount is a basic principle that can be used when purchasing something on the market, ranging from consumer goods all the way to exchange, traded securities, or even like Forex stocks, etc. The basic idea is you can purchase a product, good, services, or even like stock on the stock exchange at a premium over the fair value of the thing you are buying, or at a discount buying something that is on sale. For example, you like want to buy a car, so fair price for this car like $5,000, but price like went up and right now it's like $7,000. You won't buy this car for when fair price is 5K. You will wait for discount and buy it a discount. Same if you like own the car, you don't want to buy it, don't want to sell it cheap. You want to sell it with a fair price or higher than fair price. Same on the market. You want to buy cheap to sell in premium with high price. And if you like shorting, you want to sell from premium and sell in discount. All illustrated in the chart. Premium and discount can be applied to anything that is traded or sold in free market, from fuel to milk. When marking up premium and discount on a candlestick chart, you have the choice of marking up and lack of price action or range on the chart in front of you in order to determine the premium and discount of that particular range. From the what most traders do is look to use premium and discount as a confluence in their trading, looking to sell in premium and buy in discount. Why are you probably using premium and discount wrong? So you rely too heavy on this tool to make educated trading decisions, because you have to also look on other stuff. This tool helps you to identify premium and discount market, but you shouldn't rely like 100% on it. Use it in the market conditions that don't make sense to use it. You have to understand when price went back and this is like correction or like it's in the range, and you have to identify these market conditions. Can identify swings and high and lows. I talked about like swing high and lows in previous video. Check it out. Using discount and premium in volatile trading markets when price start going like parabolic. In this case, you just like don't trade, because you can get open in position and you will have like stop after stop, and you can identify premium and discount until price forms swings on high time frames. How to properly use premium discount in trading. So to identify premium discount, you should use like Fibonacci retracement levels. The Fibonacci retracement works best when the market is trending. In uptrend, the trader's goal is to determine the potential for correction, where the higher low will form, and consider the entry point for a long position. On the downtrend, lower high and determine the entry point for the short position. To determine the correction for an uptrend, use a grid from bottom to top. Use a grid from top to bottom to determine the correction for downtrend. Find swing high and swing low for correction use of the tool. For an uptrend, the Fibonacci retracement is stretched from higher low to higher high, and after break of market structure from lower low to higher high. For downtrends, the Fibonacci grid is stretched from lower high to lower low, and after break of market structure from higher high to lower low. 0.5 of this Fibonacci retracement levels is equilibrium. We need it to identify where we have discount and premium market. You can see this on these pictures. 0.5 zone. This is equilibrium, so it's a fair price. Everything that's high, it's premium. Everything below, this is discount. This is settings that I'm using, like standard settings. You need these numbers, specifically 0.7 zone and 0.79. This is more zone where more likely price will turn around. If we break in above 0.8, then most likely price will go further and will ignore your TAs. That's why you have to use premium discount as a support tool, support instrument in your technical analysis. When opening a short position, we always look for a price above 0.5, which is considered as premium price, and to open a long position, we look at the price behavior below 0.5, which is considered a discount price. This is some examples on US dollar, Japanese yen. As you can see, we had this like swing high and swing low. I just like use like Fibonacci retracement, and this is equilibrium. Everything is below equilibrium, discount zone, everything above premium. So in this case, we found our premium market, and I was looking for short position here. As soon as we took liquidity from this specific high, it was perfect entry. We stop above 0.8 zone, 0.79 in this case, and short position till like last swing low. Why we need to use premium discount in range? Because in range is a bit different story. You have to identify equilibrium, whereas like price will be consolidating. As you can see, you can use volume profile to identify it as well, but usually you just use it like from the top of the range to the bottom of the range, and you can find equilibrium. Same you can use for order blocks, fair value gaps, mitigations blocks, and etc. I will show everything like later. Trading sessions, like trading sessions in GMT, you can find it on the internet. You have to know optimal trading time to trade specific market. For every market, we have specific optimal trading time. For Forex market, it's like London session plus first 3-4 hours of New York session. Some pairs such as Australian dollar and Japanese yen more volatile in Asian sessions. Crypto, it's a New York session, like at the end of the London sometimes. And commodities such as like gold and silver, New York session. But lately, I noticed that we have like some really good activity on Asian session. So you can always like find something to work. So, like you can work on any market basically. It's all depends on you. Even if you like living in Australia, you can work on a Forex market and a bit on like stocks, but you have to wake up a bit early. But in general, you can work like everything you want. Why trading sessions so important? Because they connect between each other most of the time. New session opens with manipulation and takes liquidity from previous session and goes the opposite direction, which is this perfect example. We had like London session on New York opening. We grabbed liquidity from London session and went down to low of this day. Here is also one more perfect example. We had manipulation on New York session where we tested this 1 hour audio block and went down to previous weekly low. Let's identify premium and discount. So here we're like in downtrend. This is a euro US dollar. Here I want to like identify like premium market to find like some shorts. Here we like above we can see premium market above equilibrium, and we're looking for some manipulation, maybe buy to sell zone, order blocks, etc. Here we have buy to sell zone. This is like where price, so just turn around. What happened? Market maker opened long positions here. We went down, and he needs and market maker needs to close this like long position. How he does it? Price slowly going to like this manipulation. We close this long position, and price goes like lower to next liquidity pool. In this case, it was weekly low, and as you can see, we went down almost 1%, if I'm not mistaken. So you can just open position like from this specific zone in the premium market. When you see some like reverse like pattern, in this case we tested once. What I usually do, I just like open like limit short position on this high if it's in my point of interest, and my target was previous weekly low. To identify like premium market, we need to go to uptrend. Let me see, we're going to like 4 hours. Yeah, from lower low to higher high. I was right. Price just touch equilibrium 0.5 zone, and we went higher. As you can see, it's sometimes we can test it 0.5 zone, but if we have aggressive like movement, which is like on, for example, we have on BTC, price can just completely ignore discount market, but usually it played out like perfectly. Yeah, for example, here I had breaker market structure, what we could have done from lower low to lower high. As you can see, it's played out perfectly here. You can also combine it with trading sessions, which is extremely powerful tool. As you can see here, we still have downtrend on high time frames, and I want to look where exactly price will go. I usually wait for Asian session, and at the beginning of like London session we have some manipulation and we're going higher. Here's a perfect example, and like at the beginning of New York session, market opened, we had manipulation. This is called sell to buy, when we like take liquidity. As also notice in low time frame, it will be couple manipulations, which is like one low, then like next low to get rid of people who've been trying to open longs here, because they see like big support zone. And yeah, I'm usually wait for second manipulation and then going in. As you can notice, we have some manipulations during like London and New York sessions at the beginning of New York session, but usually in Asian session and second part of New York session we have just consolidation, but main movement we'll have in London or like at the beginning of New York session. I'm using like custom indicator, like my friends made it, but what I know you can find like some good indicators that show you like trading sessions. It's very important. Let me show you. We have Asian sessions, pre-New York, London, and like New York sessions. Like also you can mark previous daily high, previous daily low, but I will be talking about it in liquidity block, which will be like next. Okay, that's it. Next lesson we're gonna talk about like liquidity. This is a very important topic. You have to understand it because this is the biggest part of like trading. If you want to be successful in it.